And I'm confident you'll be impressed by the quality of our management group and also the quality of the companies that we're involved with. To give you a greater perspective on my investment strategies and portfolios, we've also included businesses that we've been involved with for years and years, such as Black Knight and FNF, and they're going to be doing presentations. This morning you're going to hear from, in addition to Ceridian, you'll hear from Alight, which we're very happy with, Paysafe, and I'm confident you'll find these investments impressive, with numerous characteristics common across all these companies. And our goal, pretty simply, is to invest where we can make a difference, where we can add value in terms of management expertise and operational expertise.
Hello. Oh my lord, Bill Foley, the god, the legend, has actually spoken in his December 2021 Cannae Holdings Portfolio Conference. Bill Foley laid the haymakers down as to what will happen for Paysafe moving forwards, and for Cannae, that's simple: share buybacks. Why? Because they're hugely bullish on Paysafe and reckon that Paysafe is grossly undervalued at the current sub $4 levels per share, which is insane.
To that end, we did do a press release this morning, and we're going to be very active in the stock buyback area going forward. And as I said, we intend to be aggressive, and our board of directors has told management that if you run through this particular buyback authority, then we'll give you more. And we intend to keep on doing this and reallocating some of our free cash flow to buy shares back, because why not buy shares at a 40-50% discount to fair value, as opposed to trying to find a company that will do the same thing for us. So
within the conference, we also hear from Philip McHugh as to how he is going to turn the company around, and there are 2 Easter eggs contained within his portion of the conference, which is spelling some big news coming out for Paysafe very soon. Stay tuned for this drill and more. Keep it simple. Well. Since going public back in late 2020, Paysafe stock went up to its highs of $19 back in January last year. But the trajectory of the stock just went down and down until it hit rock bottom and falling off this cliff after the third quarter earnings last year. So, trading at sub $4, what do I see coming? I see a strong reversal in the mix. As we hear from Phil McHugh later on, there are some contracts, some big contracts in the mix that are coming. So the Paysafe leadership and directors have now put their money where their mouth is. And back in December 2021, Philip McHugh purchased approximately 290,000 shares of Paysafe's common stock. That is big. And the company also announced other executive officers and independent board members of Paysafe also purchased approximately 447,000 shares of Paysafe's common stock. This is very bullish. Whenever you see insiders actively buying the stock, it normally means one thing and one thing only. They have strong bullish confidence in their company and business, enough so that they reckon the stock price at current prices must be grossly undervalued, and that getting in at these prices means that they will only be making more money in the long term. Not only has the Paysafe insiders bought in, but Paysafe's principal shareholder, Cannae Holdings, which is headed by none other than Bill Foley, purchased, check this, $22.2 million worth of common stock in Paysafe. That is big, and that shows that Bill Foley is pulling some strings behind the scenes, enough so that he's willing to put in more money to take up more percentage stake in Paysafe. This is very bullish for me moving forwards.
So I think that the first message we have is Paysafe has been around for well over 20 years. It's scaled, it's highly profitable, it's truly global, has a really consistent track record of consistent growth, both organically and integrating deals inorganically as well. The second message is, how do you plug into Paysafe? We talk about being a true specialized payment platform, and we win when we combine 4 pieces, and we'll bring that to life with some examples. One is ease of connectivity. How easy is it to integrate into Paysafe? It was interesting to hear David Ossip talk about that as a classic kind of Bill Foley playbook, and that's absolutely the direction we've gone in. So you can sell all of the different solutions together. Two, we provide more ways to pay. We are not just a traditional card processor. We have a very scaled global gateway. We have a very scaled digital wallet that gives you very powerful pay-in, pay-out capabilities. We can make cash digital. It's a small but very valuable use case for our clients. More and more, we're really building up our open banking or account-to-account capability. We think that's a fast-growing payment rail. And over time, we'll certainly, with our KYC and our AML capabilities, we see crypto as a potential form of payment, not just a form of investment. So how do you get all the ways to pay so a merchant or a client can simply just sell more? The third piece, though, this is where we really start to specialize, incredibly deep risk and regulatory management. We have over 300 people in risk and compliance. It's quite unique for a payment company. Very strong regulatory management, understanding of the online sports betting world. And finally, we're not a generic player. We like to go deep into industries. We're the leading player in sports betting and online casino and poker. We really like the crypto and NFT space. We think that's going to be very disruptive. Digital goods like video gaming and travel, where there's always a risk component, either on the credit side or on the compliance side, where we can differentiate as well. So those four pieces, when we combine it, we win the deals that we want to win. The third key message is we've been on a journey. Lots of assets have been bought over the last several years. I came in 2.5 years ago, and we've embarked on really driving fast tech platform integration and cost management. And again, this is another thing in the partnership with Cannae in terms of the discipline and the focus. Single API now to integrate all of our products, single risk platform, well ahead on moving from basically 0% to well over 70% of our business now in the cloud, and we'll complete that journey in 2022. That gives us incredible scalability that we didn't have before. The risk team has really grown, driving down cost, the cost of credit loss and fraud with less people. We're on a cost plan. We've beaten that for this year. We'll take those repeatable costs into next year, and we'll add a further $20 million of cost takeout as well. And then finally, integrating, so executing there. We bought 3 companies at the end of the summer. 2 have closed. SafetyPay will close in January. But to give you an example, Pago Fictivo closed 60 days ago. Technology is fully integrated. 16 of our global clients are now trading in Latin America, and we did our first transactions with one of the largest online sports betting companies just yesterday, from close to yesterday, 60 days. So feel really good about how the team is executing at pace. And I think the last message that really matters to us at Paysafe is North America iGaming. That's clearly one of the fastest growing digital commerce markets that we see in the world. It's growing fast as it is, but it's just early innings. Florida, California, New York, Texas have not even begun. So there's lots of markets yet to be open. Canada's just opening now with Ontario. We're the #1 player in Canada. 100% of the regulated gaming currently goes through our gateway. 75% of the operators in the U.S. are plugged into us, so we feel good about that. We have a nice pipeline of more clients and states that we'll be announcing. We're seeing eCash really start to grow. So we've grown mainly through gateway and card. Our eCash product is starting to get some competitive takeaways. Our digital wallet continues to grow. It's from a small base, but we really like it. It's higher average ticket, repeat jumbo transactions for our VIP players. So we're building the proof points to show that we can beat existing products in the market. We've just got to get it to more tier 1 players and get scale behind it. And then finally, while we're the gateway, we have 2 acquirers, both FIS and Fiserv. We will double the amount of back-end acquirers in the next 6-7 months. So we're really expanding that. That gives us flexibility, and it gives, more important, our clients a lot more choice and value as well. So those are the 4 big pieces, if you were to summarize what's driving Paysafe value. And let me just bring it to life, George, with 2 examples. The first one, this is a signed deal, not publicly announced. It's a major gaming brand. It's a well-known brand in the U.S. and globally. They have both online gaming in several states, as well as in-casino presence. Besides that, they needing card processing solutions, they have a real cash problem. They've got real cash usage in some of their physical sites, and they want those customers to be plugged in into the online world as well and have a seamless kind of app experience. And so that was a big issue. They needed card processing, but they needed more than that. They needed a cash solution. They need global support, and they do have a pretty big VIP population where our Skrill wallet could really support them. And so that's a complex need, and we've won the deal by having deep relationships in the industry. We're ready on day one with all of the regulatory needs in all of their states and their emerging states. Our eCash solution we took away from another supplier, able to put it all into a single API integration, and they really like the VIP capability and see that as a day two opportunity to build on the Skrill platform. So we're really excited about that. This is a competitive takeaway in New Jersey and Iowa as well, where we're taking volume from an incumbent. So we're pretty excited about the combination of how we win. The second example is another signed deal but to be announced hopefully in Q1. We're very active in crypto. We have 40 cryptocurrencies that you can trade in the Skrill wallet. There's been some nice growth in there. We want to see more from that. We also process cards on about 7-8 platforms, crypto exchanges. But we're starting to work now with the crypto exchanges in a much more holistic way, looking at their full end-to-end needs, bringing all of our products together. And in the example here, we're dealing with an extremely fast grower, very disruptive, very scaled. You're talking 30, 40, 50 country market presence, very demanding in their user experience and their technology. So you have to be able to keep up with them on that. Two, extremely complex risk and regulatory needs. They've got to plug in to e-money licenses. They need help and support on KYC and AML services. They need access to not only card processing, our Skrill wallet, and our eCash. They want access to real-time banking. They want IBAN accounts to do bank transactions at scale. So they want all those multiple ways to pay. And what's great is our team really work very fast. We have the card processing. We have single API, give all the products. But we really start to take our wallet platform and look at the capabilities and allow kind of API connections so they can take our wallet capabilities. They can still have Skrill fund in, but they can take lots of our wallet capabilities and create almost an embedded finance solution. You plug in, you can do your own pay and payouts within your own app. You can access our EMI license, our KYC service. You can access real-time banking, as well as cards, Paysafe Card, and Skrill. So that combination of risk capabilities, opening up our wallet to create embedded finance, and plugging in all those payment rails really made a difference in a highly contested client. So we're pretty excited about this. We think this is going to be a pretty nice emerging area for us. So that's the story, George, in a nutshell. I think the first thing is having a consumer base as well as a merchant base absolutely makes a huge difference. We have 15 million active customers across Paysafe Card, Skrill, and NetTeller. Within the pure digital wallet space, the PayPals, the Cash Apps, the Alipays, the super apps, we're not going to try to compete at that level across this generic super app space. The amount of marketing spend involved in there, the profitability of some of the people trying to follow has extremely long and I think questionable road. So we're very focused in industries. Skrill and NetTeller are absolutely focused in the gaming and in the trading world where there's a lot of overlap with customers. They're larger ticket, they're sophisticated, they need to fund from multiple countries. VIP support makes a big difference. Working with banks and managing fraud is a higher level than in a generic app. So these are the things that we do that also work with our clients, so the merchants as well as our consumers, to make those products attractive. We had a pretty big reset in Q3. That was a tough story. It's definitely not a story where we wanted to be. But within that, within the reset, we were very clear about while there's growth plans, we also had to reset the risk profile too. We exited some very high-risk channels, some very high-risk markets. On the reset side, I'd really say there are two things. One, we did a market-by-market, client-by-client review. Took a pretty conservative, grounded baseline to baseline that business, and that's what we talked a lot about in Q3. Two, we reorganized. We brought in new management. Chirag ran payments internationally at Amazon. He's landed extremely well. We've reorganized the entire team. We've already right-sized it. We talked about that. That's already done. took out all the kind of bottom performers out before Thanksgiving. And we've also combined all of enterprise sales across digital wallets, across eCash, and across Card Gateway into a single team internationally. We do it for North America iGaming, but we did it globally. And we think that's a very, very powerful focus on our clients to re-engage. In terms of responding, we talked about a few things. Pricing, there's some pricing areas to fix where we could be more aggressive, more competitive, but also some areas where value is being dropped. I'd say about 60-70% of those actions are already completed, coded, and live, and showing some good data points. User experience and the onboarding is already improving. Chirag has a very, very, very aggressive customer UX mindset coming from Amazon. And then finally, the client engagement. We're doing lots of campaigns to drive more growth than we traditionally have in those markets. So that's one. The area that's exciting, though, that's all about baselining and getting back to good growth. To get back to big growth, where are the areas? And we really see three things. We like the wallet in the U.S. It's small, but it's growing at very, very strong double digits per month, right? So from a small base, that can ramp up over time. Two is crypto. We trade 40 cryptocurrencies. I talked about the wallet capabilities with crypto. And then three, the wallet as a platform, this kind of embedded finance. We're seeing demand. The client we're talking about here is scaled. We have three other NDAs with clients interested in the same type of solution. So those three pieces, we think, as they bed down and get traction, can get the wallet back to the high growth expectations. But we're not there yet. It's going to take us, as we said, through 2022 to prove that out. And what you're seeing is a huge mix of video gaming, sports betting, and investing, all combined together using wallets, sometimes with no fiat at all. It's pure crypto. And to be good at that, you need to be good at sports betting, video gaming, investing, crypto, and wallets. And that just feels like that ticks a lot of boxes for us. So
if you can help the merchant sell, they will pay you, right? eCash is a great example. I think Philip asked the question when he first joined. I asked it. 7% take rates. How's that sustainable? How does that work? Well, we're introducing, close to 9 million plus customers, 1 million distribution points to online retailers who cannot access those customers. They gladly pay us the 7%. We share with distribution. Consumer, it's free. It's great for the consumer. And it's been very sustained over the years. As a matter of fact, in 2021, it's higher than usual.
Look, there's this view that everything will consolidate down and then the take rates will plummet. And there's always been a tendency in payments to oversimplify. There'll be one payment form factor. Everyone will go to a wallet. Everyone will go to a single card. And it's always wrong. People pay multiple ways. It's actually getting more complex. And the consolidation does drive down margins. So card processing used to be wildly profitable. And it's really shrunk down where wholesale processing, you're in the 2-3 basis points on a good day. But then companies added value on that. They added software. They added auto boarding capabilities, risk capabilities. They're earning 50-60 basis points. Other people like ISVs and the Shopifys of the world added software. They're charging 150, 200 basis points. So it's not about everything going down to a low base rate. It's picking your rails and adding value on top of it. So real-time banking is competitively priced in Europe. But what you're seeing is if you do it well with good user experience, you never leave the client pay page. You're linked with other ways to pay. Maybe you can add some KYC and some FX. Well, you can take a 5-10 basis point business, and that can become a 150 basis point business pretty easily if you do it the right way. So I think that trend will repeat itself over and over again in payments.
Our goal has always been we invest in assets that give us an opportunity for serious growth, but they need to be an asset that we can help fix operationally. We're always going to seek to have majority or control in our various activities. And as I mentioned, we want to go where we can add value. And we're cognizant of the fact that we're traded at a significant discount to the fair value of our assets. So we now are freed up with our cash on hand and resources to engage in a significant buyback activity. So our first goal is we're going to start acquiring about 11.6 million shares. When we run through that, and then we'll buy another 10 million. And if we run through that, and the stock is still trading at a big discount, we'll buy another 10 million until the only shareholder's me. So we'll just keep on doing it. So it's going to be a significant use of our capital, and we're pleased with where Cannae is. We're pleased where its assets are, and then there's Paysafe, which has been a disappointment. And if we wanted to take a loss and raise some capital, we could do it there. But I don't want to be, again, I don't want to be the guy that sells a payments company in the iGaming space that's trading for 8 times and it's really worth 25 times. So, but if it's a public company, then that's the way we generally are going to exit.
To summarize, 2022 could be the turnaround year for Paysafe, and Paysafe could actually turn out to be the play of the year at sub $4. It makes absolutely no sense. Bill Ackman once said, one of the best investments that you could ever make into any company is a company that's sole business is based on charging for making a payment for you. Thanks for watching, and please note I'm still very bullish on Paysafe, especially after drilling into what Bill Foley and the team at Paysafe and what they have done in the recent share buybacks, and we are clearly expecting some big contracts on the way after what Phil McHugh dropped during the Cannae Holdings conference. So thanks for watching, and please take this drill with precaution and always do your own DD. If you found this video informative, then please do me a simple favor and consider subscribing to this channel so you get a pop-up when a new video is uploaded. I am a simple trader. I try to keep this simple and will simply see you in the next one.